overall, 2025 was a very good year for a range of Australian companies. Now, to take us through the year that was, I am now joined by NAB Trade's Head of Investor Behaviour, Gemma Dale. Gemma, thank you so much for joining me. So overall, how did the Aussie share market perform this year, and how did we compare to other markets like Wall Street?
Look, I think investors who have held on through this year have reason to be reasonably pleased with how things have ended up, right? It's easy to forget that back in April we had Liberation Day, but the tariff announcements that came from Donald Trump started earlier in the year. So the market started to wobble, frankly, back in January and February when we had 25% tariff announcements on Mexico and Canada. If you remember, we saw a really dramatic sell-off in April when those tariff announcements were far more extensive than anyone anticipated. And then we've seen just simply an extraordinary rally across global markets since that really aggressive sell-off that has resulted in a lot of markets closing really strongly, frankly, for the calendar year. So the ASX, depending on which benchmark you use, is up around 7%, a little bit less for the 200, a little bit more for the All Ords. And yet, if you look at US markets, the S&P 500 is up close to 20, Japan's up close to 30. If you look at South Korea, which is sort of one of the more extreme examples, you're up more than 70% for the year, but there's some idiosyncratic reasons for that particular example. But it's been a really strong year for markets, really, given that there were some pretty substantial concerns about how the economy was going to hold up this year.
So, Gemma, I've got a graph that's about to come up here of the top stocks in Australia on the ASX200. There we go. We have top stocks including Liontown, Regis Resources, Genesis. A lot of mining stocks did very well in Australia here. What's behind that?
So the really fascinating part about it is these are not all the same materials. It's not like we're just talking iron ore or just talking lithium, for example. You've got some gold miners in there, and those guys were absolutely going to have to catch up to the extraordinary run that we've seen in the gold price. So the gold price rallied really hard through late 2024 and even more strongly through 2025, up more than 60% this year, which is just astonishing, frankly, for what is considered to be generally quite a defensive asset and one that doesn't hold up terribly well when rates are rising. And we've seen expectations of interest rates increasing through the latter part of the year. There were expectations of cuts for a long time. We've had to sort of moderate those. And then the silver price has caught up even more aggressively, up 150% for the year. But we've also seen the lithium price rebound after hitting pretty substantial lows through the sort of 12 to 18 months prior to that. So a lot of this has been sort of idiosyncratic elements within the resources space, lots of different materials performing well, but for quite different reasons. We've seen copper performing incredibly well. A lot of that is linked to data center build out. So you've got data center build outs, you've got central bank buying of gold, and you've got lithium on the battery side, more of a rebound. And that's feeding into a whole variety of miners and materials that are performing really, really well.
And so on the flip side, Gemma, another graph about to come up here, which is the lower performing stocks on the ASX200. Bit of a mixed bag, really. HMC Capital, IDP Education, Treasury Wine Estates, down 53% in a year. What is behind the bottom performing stocks here in Australia, do you think?
Look, there've been a handful. I mean, some of these are relatively small. We've seen some really big ones that have hurt investors this year. And the ones that have hurt our investors and hurt fund managers also pretty badly, and they've been quite sizable falls, have been CSL in particular, off, more than 30% through the year. It was the third largest company in Australia recently. At one point, it was Australia's largest company. And it's really, really been punished through the last 12 months and frankly, since pre-COVID, to be honest. And then we've also seen WiseTech hurt really badly, mostly due to governance issues. So we've seen a whole variety of different companies that have been punished by the market for a variety of different reasons. And some of those larger ones have been pretty painful for those who are holding the index, particularly for those who have been holding stock specifics, particularly in the healthcare space. So healthcare space off 20+%, and the IT space off 20+% as well. They've been dragging down the index. If you've been overweight those two sectors, it's really hurt you. And then you see those individual names. Some of them had actually run very hard and they were just sort of coming back down to earth more than anything else.